You must understand why the bankruptcy of the biggest property developer in the world is actually going to affect everybody. And this is something that we must pay attention to. I'm going to break down all the details of what happened leading up to it. I've been covering it for years, and now we have it official. This company has gone bankrupt. There has been another that's been affected, and I'm going to show you what could potentially occur. There are US banks that are exposed to Evergrande as well. I'm going to show you what's coming next. There is so much to this that we've got to break it down right here and now. No time to waste. Let's begin. First things first, China's property giant Evergrande files bankruptcy protection in Manhattan court. So there's a lot that's been happening, some recent developments, and I'm trying to bring you this information as it comes out. Understand that there is a crisis inside of China with its real estate. One thing after the other has been going on over these past few years. As soon as 2020 happened, the lockdowns, all production stopped. This created an issue. You have Evergrande officially failing after all this time. Oh, people were laughing it off as if, oh, that was never going to be a problem. Well, you halt the stock. You basically hide any information publicly available to everybody. And of course, you're going to be able to push this further down. But guess what? They can't pay their bills now. And so they're not the only one. And this starts to create a snowball effect. Billions cannot be paid back. We need to understand this is not small little bits here. We're talking about the biggest property developer in the world. Their debt over $300 billion. Okay. Companies in the US are exposed. We'll get into that later on today. I just want to show you the details of it. China's heavily indebted property developer Evergrande Group on Thursday filed for Chapter 15 bankruptcy protection in a US court. Right here, you could look at the bottom. It says the world's most indebted property developer defaulted in 2021 and announced an offshore debt restructuring program in March. This has been going on for a long time. They've been building all of these buildings, and then they were creating all these different schemes. If you were here on the channel back then, you know exactly what I'm talking about. They created these new ways to get money in the door. Oh, you have a brother, you have a coworker, you have a sister. We're going to sell them this special product, get them in, incentivize them with anything possible. And then as soon as 2020 happened, the development stopped. People couldn't get their paychecks. It was kind of in a sense like a little Ponzi scheme that was going on. And then they ran into this issue really, really quickly. And so we're dealing with that now a couple of years later. Okay, you could see this, the issues over here. Obviously, this has been going on for a long time. It's not just a new thing, but it's one of many. And as they say here, property sector fallout. There's contagion inside of China's property sector, and we have to talk about Country Garden. Now, while this one company, Evergrande, is the biggest property developer, when you look at Country Garden, in fact, there are more developments that they have. So they are potentially affecting hundreds of thousands of people that they have bought these homes, and they're likely never going to get them because, as I covered in the previous video to this one, you've got a big issue. Look, my name is David Gutierrez, and what I do here at this channel for well over a decade is break down all the details. I make it real simple. I get rid of the jargon. I give you only what you need to know. I have developed things like the money mirror method that were able to allow me to pinpoint the exact time frame in which last year the markets hit their bottom. Then I started telling my mentorship group, things look a little stretched right now. And it seems as though, based on this indicator and that indicator, that we might see a little pullback. And so on and on. I'm trying to highlight the fact that I'm using the right details and the right indicators so that I'm able to bring that to you. All you got to do is hit subscribe down below, and you're going to get this front and center. I'm not going to hold anything back. Okay, the gatekeeper is not here. China's property troubles aren't getting better, intensifying calls for bolder policy help. And that's what I will bring up at the end of this episode. So you stick around, you're going to understand what I'm talking about. You got to know the next phase of this. New home sales for the top 100 developers in China dropped by about a third in June and July from a year ago. So what's that mean? Well, you know that the property issue last year was bad, but it's actually worse now. It's not getting better. It's not slowly recovering. That's not happening. It's actually getting worse. Double-digit growth earlier in the year, and so they, boosted up for a period of time. No. Year over year, getting worse. You've got Evergrande, you've got Country Garden, and many other companies. Now, it isn't just that, it extends out further into what we talk about with the local government financing vehicles. Okay, they created these little debt packages, and now they want to push everything off into the local government debt. Oh yeah, we're going to make sure that we can just shift this problem elsewhere. I brought it up in the previous video. It's a little complicated in terms of the jargon and so on, but understand that what happens inside of China usually works on like a local level because, hey, you're trying to manage 1.4 billion people. It's difficult. So they break this down into local environments. And when we look at that, though, there's this incentive for them to build and grow, but it comes at a cost when there's a lot of fraud happening. And there's a lot of things that, aren't really been taken care of. And you could see that right here and now when we get ahead of ourselves. China's Evergrande collapse shows the need for $1 trillion Beijing rescue plan, according to this particular strategist. And $1 trillion worth, of course, would be quite significant compared to the total overall size of the economy. And potentially, they're going to get there. We will see what happens. More on that in a moment. Who's affected by it? You're probably asking yourself, well, if Evergrande is in China, I don't need to worry because that's a Chinese problem. Okay, well, what about this? This is back in 2021, by the way, when this was starting to come out. Like, who's affected? Who's affected? BlackRock, Royal Bank of Canada, Blu-ray Asset Management are among the asset managers exposed to the embattled developer China Evergrande Group. And it just shows us that there's so many different companies. Fidelity, Sinopec held sizable investments as well. So you can expect that there are, in fact, a lot of companies. HSBC, they mentioned in here, all Credit Suisse, of course. You can see that. So actually it says they had sold their position for Credit Suisse. So they escaped in that regard. But the point is a lot of global banks are going to be exposed to Country Garden. They're going to be exposed to Evergrande and all of these other companies. That's the way it works. I don't expect mass exposure. I don't expect this huge domino effect that suddenly ripples around the world. I expect something else. Not that there's not going to be problems, but I expect something to happen, and it's quite dangerous. Let me show you this first. I want to talk about the China currency problems. First things first, you got to know that the yuan is weakening rapidly. This is a problem for their country. They want to keep it within a range. They've decided that this is the right range, and yet it's falling further against the US dollar. China is trying to boost it here at this time, and I could show you some details around that. China's targets the yuan bears with the most forceful fixing guidance ever. And I'm trying to highlight this. Like, what we're seeing here are like extreme levels. It's not, okay, another day. No. We're getting most ever, historic, never been done. Like, all these things are coming up. Daily reference rate raised for the first time in 6 sessions. Authorities told state banks to ramp up their intervention this week. So they're all doing this right now, going ahead with it and trying to stabilize their currency at this time. As we see, this chart highlights it for us, China's inward foreign direct investment fell to a record low in the second quarter. So of course, we can look at this, and of course they're trying to stabilize it, they're trying to do something, but we can see what's happening. It's very clear. The writing is clearly on the wall. You can look at China's imports and exports. They're going down, and that presents itself with an issue because number one, that tells us imports, they don't have the income coming in Domestic consumption's not happening. Like people, they're not buying stuff. Louis Vuitton is not sending products to China as they did before. Concrete, copper, steel, everything they need clearly are not coming in as they did before. And at the same time, their exports, meaning you got global problems that are going to affect them because less manufacturing and so on. That means potentially you could take advantage of the circumstance, getting things on discount. A lot of the suppliers out there, they produced way too much and now they're sitting on bulk inventory. Their inventory costs have gone up as well, not just in the United States. So you could potentially reach out to them and strike a deal. This is possible. They don't want to do a deal, but hey, that's the circumstance they're in. China police visits shadow bank investors at home to quash the unrest. So I was talking about this in the previous video. Zonrong, well, they missed their payments, and the police apparently received names of clients across China. Now, we don't know what's true and so on. This is from Bloomberg, but I just want to highlight the fact that, look, if they want you to pay your bill, apparently you're paying your bills, and if they want you to go with their whole social credit score thing, you're going to do the whole social credit score thing. And if you are protesting out there, they're going to know exactly who you are, and they're going to be able to shut you down. They know exactly what's going on. This is the world we live in today. It's a concern for sure. I wanted to highlight something. On the previous video, I showed you the debt load being over 300%. You got to understand that there's different levels of debt. This chart I'm showing you specifically is household debt. So China's household debt, 63.3%. This is in relation to their GDP. So the size of the economy, and you look at that, it is at the global average. So people think that they're not indebted. Oh, the Chinese, no. They don't use credit cards. They don't use mortgages. Doesn't work. Oh, absolutely they do. And it's on average about a global standard. So I wanted to give you this. This really ties it all in. And I've got some unfortunate news for people who, they are bullish on Evergrande. Here we can see it. Jim Boy Cramer. Oh dear. I can tell you that's not going to happen. China's not going to collapse. As big as those institutions are, and they're big, they're not going to be big enough to bring down the whole darn regime. Now, I don't think that they're going to bring the whole thing down. I think something else is going to happen. But Jim Cramer had to voice his opinion. And you know about the inverse Cramer index? Whatever he says, the opposite is actually more likely to be true. But anyway, I found that to be funny. I wanted to bring it to you as we look at what's next. You're wondering, potentially, what is next? Okay? And I believe there's two possibilities. You have a collapse of everything inside of China. The real estate industry starts to go down one by one. All of the banks start to fail one by one. That has some exposure outside of China. You look at zero consumption happens inside of China. The whole thing grinds to a halt. We go major deflation, and just everything falls apart for, let's say, a few years at least. Major recession, even worse. That's one possibility. But number two is we get massive money printing, massive scale. And this would be in the form of stimulus measures, tax incentives, and rebates, actual intervention from the government, basically forcing banks to do this, forcing businesses to do that. And you could have just generalized quantitative easing where they are pumping cash into the system, buying up and monetizing this debt. What does that mean for you? Well, of course, this means that we will see high levels of inflation. This inflation is going to have an impact globally. There is a big concern that what we see here will be the start of the next level of global inflation. Let me share this with you. In 2009, China sparked global reflation. In 2023, China is about to spark global deflation unless it goes brr. And we're talking about the money printer. And so it remains to be seen what will happen. But I can tell you right now, the most likely action is a devaluation of currencies worldwide as we see more and more money going into stimulus, going that direction, not, prudence, as one of the high level officials had previously said. Prudence, we need prudence at this time. Didn't work out that way. And I do believe that this is a concern for everyone. If China starts printing, starts reducing interest rates even more, which they did, we're going to see this going on globally. We've already seen, I believe it was Brazil, Chile, and some others start to go the other direction. This is a big concern, of course, because what does that mean for you at home? And people thinking that we're going to have a massive deflationary cycle that gives such great opportunities to buyers to come in and get things at discounts. What if we're about to go into inflation that would make what we have seen over the past couple of years seem like nothing? Do you see my concern? Do you think that this is a possibility? I want to know your comments below. Okay. And then we have this, which is essentially where you're going to be able to get all of the details, what I think about how the system works, how I was able to pinpoint the bottom in October, how I was telling my mentorship group that, hey, this is something we should be looking at. We'll cover it week to week casually, but it seems to be at least accurate so far. All of that right here in the Money Mirror method and on the Discord, as you will see. Come into the Discord, totally free. When you get in, you can ask me a question. Don't be afraid to ask me a question when you come on in. Say hi, and I'm going to message you back. Okay, I try to get back to every single person. That's where the community is being built. Hit that link in the description below, and I'll see you there.